Welcome to The Explainer. Today, we're diving into a pretty stark reality in the modern financial landscape. Think about it. Markets are moving in microseconds, yet far too many legacy systems are still crawling along in days. If you're a hedge fund manager, a prop firm trader, or a fintech founder, you already know this pain. That gap between your market thesis and your infrastructure's actual execution speed, yeah, that's exactly where you're losing your competitive edge.
So ask yourself this question, and be really honest here. Is your financial infrastructure bleeding revenue? I know it's a provocative question, but it's absolutely the right one to be asking. When we talk about an infrastructure bleed, we aren't just talking about your monthly server costs. No, we're talking about the painful stuff. Missed trades, stalled sales pipelines, delayed feature rollouts. It's basically an invisible tax you're paying every single day just for running modern strategies on outdated architecture.
Let's look at the brutal contrast here. When we stack up those bloated legacy frameworks against the unforgiving demands of modern high-frequency trading, honestly, it's not even a fair fight. On the legacy side, you're dealing with severe latency overhead from standard APIs. You're constantly fighting data silos where your CRM data, your SQL transactions, and your CSV market feeds literally have zero visibility into each other. And worse, you're accumulating security debt through these messy patchwork integrations that compliance audits are inevitably going to flag.
So the crucial point boils down to this one metric: 200 milliseconds. Believe it or not, standard APIs and bloated architectures often add over 200 milliseconds of overhead to every single transaction. In the world of algorithmic trading and real-time analytics, a delay like that isn't just a minor inconvenience. It is absolutely fatal to your strategy's alpha.
But here's the high-performance engineering antidote. Enter PrecisionFinDev. Listen, this firm doesn't just write code. They literally engineer the backbone of modern finance. They design these incredibly high-performance data platforms specifically for trading firms and fintechs, and they're built from the ground up to completely neutralize those exact infrastructural bottlenecks we just talked about.
In practice, what does that high-performance engineering actually look like? It translates to this: blazing, sub-20 millisecond trade execution latency. That is exactly the speed you need to capitalize on split-second market volatility before the window slams shut on you. But it goes beyond just speed. It's also about sheer volume. We're talking about a massive throughput capability here. Over 500,000 transactions processed per second. Whether you're doing tick-level historical data replays or pulling live market feeds, the system simply doesn't choke.
And of course, all that speed and volume, completely meaningless if the system goes down. PrecisionFinDev engineers these platforms for true mission-critical reliability, guaranteeing 99.99% uptime. You're getting global CDN active status, intense system optimization, and seamless automatic failovers.
Let's move to Pillar 1, autonomous AI trading agents, engineered specifically for hedge funds and prop firms. Take a look at how comprehensive these agents actually are. These are not your off-the-shelf generic bots. PrecisionFinDev builds custom agents around your specific strategy logic. They provide 24/7 autonomous monitoring with multi-market coverage, and they integrate directly with your live broker APIs. Plus, automated risk controls and position sizing are baked in from day one. They even utilize full LLM-powered decision layers, which means you get a seamless transition from paper trading validation all the way to autonomous live execution. It's a total game changer.
And this quote right here brilliantly illustrates the real-world impact. Robert M., a hedge fund analyst, noted that PrecisionFinDev's backtesting engine cut their strategy validation time from days down to mere minutes. He specifically highlighted their solid financial domain knowledge. And you know, that really is the main differentiator here. They actually understand Sharpe ratios, drawdowns, and institutional-grade multi-asset engines. They aren't just doing basic web development.
Now for Pillar 2, AI-powered sales pipelines. This is all about how you multiply your qualified lead flow. And the results they get here are striking. Take a project they did called DreamLead, an AI lead qualification platform. They achieved a staggering 3x increase in qualified pipeline growth. They also managed to drop lead response times to under 5 minutes. That is massive. This kind of setup creates a massive compounding advantage for your sales team. These agents execute AI lead scoring based on your own configurable criteria. They handle highly personalized, multi-channel outreach across both email and LinkedIn. They automatically enrich your CRM, handle the back-and-forth replies, and even book meetings directly onto your calendar. The whole shebang.
This workflow guarantees that your human reps are spending their valuable time actually closing deals, rather than endlessly triaging unqualified leads.
Moving on to Pillar 3, secure fintech SaaS platforms, built for ambitious fintech founders. When you're building financial SaaS, security and connectivity absolutely cannot be bolted on at the end as an afterthought. PrecisionFinDev ensures that bank-grade integrations, specifically native connections with major players like Plaid, Stripe, and Yodlee, are foundational to your architecture right from day one. As a founder, you really face a critical choice here. You can try to stitch together patchwork integrations and risk massive, business-ending compliance failures, or you can start the right way with PrecisionFinDev's SOC 2-ready architecture. They utilize end-to-end encrypted data storage, proper OAuth 2 and SSO setups, and they conduct rigorous penetration testing. All of this ensures your application can easily pass strict compliance audits and handle sensitive data securely.
Finally, Section 4, the engineered process. This is all about fixed scope, reliable delivery.
If you're someone who hates vague estimates and creeping project scopes, you are going to love this. They operate entirely on fixed scope pricing tiers. Whether you need an AI trading agent, an outbound sales agent, or a full fintech SaaS platform, they offer clear, starter, professional, and enterprise tiers. Costs are known strictly upfront, starting around $3,000 for a basic agent and scaling up to $18,000 or more for full autonomous enterprise suites. And the timelines? Just as rigid, ranging from 2-week MVPs to 12 weeks complex multi-tenant deployments. You get weekly milestone deliveries, so your progress is always highly visible. No surprises. Their step-by-step methodology really proves that they don't just write code, they systematically engineer reliable systems. It starts with a discovery phase to map out your exact technical architecture. Then comes development, utilizing agile sprints and weekly code deployments. Next up is deployment, setting up robust CI/CD pipelines straight to production. And finally, optimization, where they fine-tune the performance and scale the system up. Best part? You get the full source code and technical documentation at the very end.
To wrap up today's explainer, I want to leave you with this final, provocative thought. What is the true cost of maintaining your slow, legacy infrastructure versus the immense competitive edge of engineering the future? If you are tired of relying on spreadsheets and bloated frameworks, it might just be time to book a consultation with a firm that treats your code with the exact same precision that you treat your capital. Thank you so much for joining me for this deep dive, and I'll catch you next time.